Yo, what is up, guys? It is July 15th. Today we took an absolute banger. Banger, banger. We are cooking, starting the beginning of this week. Absolutely cooking. Um, let's look at the P&L ski. Made around $2,200 today. So, super happy with the way my trades are going. I feel crazy confident with the way that I'm trading right now. I don't know if that's bad or if that's good, but we're just sticking to a system. It's all about protecting your capital at the end of the day. You want to be able to know how to cut your losses, keep your emotions in check, and then, yeah, let's go over today's price action. So, going into the day, I wanted to be bullish. Um, I felt like that we had the ability to come sweep highs here and highs here. And I wanted to see a rejection off of this 15-minute gap right here. So this got inversed. So I thought we were going to see some bullish price action. And I wanted to reject off of this inverse fair value gap here on the 15-minute. But, the narrative changes. You got to be able to react to the market and trade with what it gives you. So after I saw this 15-minute inverse candle, then I wanted to see bearish because I knew my bullish narrative wasn't being filled. So after I saw this bearish price action, I knew that I wanted to see shorts going into the rest of the day. And my higher time frame point of interest here was a change in state of delivery off of this 15-minute here. So after I saw this change of state of delivery off this 15-minute here, paired up with rejection off of the inverse fair value gap or this inverse candle here, now we are pairing our higher time frame conditions, which gives us more conviction and it's just more confluences. And after I saw that I wanted to go short, I wanted to go look for an entry. So from the higher time frame model, from the higher time frame going to the lower time frame, we're looking at what price is giving us. So first of all, now that we have our higher time frame condition, we want to be able to find our low resistance liquidity. And where is our low resistance liquidity? It is these candles here. So a bunch of low resistance liquidity is just price creating points of creating basically price that can be that is more susceptible to be traded into. So as you can see here, there's no fair value gaps. And because of this, we usually reject off of fair value gaps. So now that we don't have fair value gaps, these prices are more easily to get traded into. Compared if you had fair value gaps, then you had the opportunity to get rejected or the opportunity to create support. So I have my low resistance liquidity here. Super nice, super nice. And then now that I have both of those things in check, my high time frame condition, my low resistance liquidity, and draws on liquidity, which is here. This is an obvious draw here, then a draw right here. So there, and go lower, but had enough draws to be confident in this trade. So go back to the 1 minute. I did see this 1 minute get inversed right here, but I want to look at the further 1 minute fair value gap that went right here. You could have banged out on this trade and, targeted here, set highs right here, and then targeted lower liquidity, and that would have worked as well. I just wanted to see confirmation. Or not confirmation, I just wanted to have better probability within my trade because, it could just have been a retrace or it could have just been a support, and we could have traded it higher, but that didn't end up happening. So I got exactly what I wanted off of my 15 minute. I knew that this inversed, and then I wanted to see my higher time frame condition get hit, which is the change in state of delivery and this inverse fair value gap, in which it did. Go on the 1 minute. This got inversed. Didn't check the trade there. Waited for a higher probability. Loved this displacement candle here. Displacement candles right here, either when you're going short and it has no wick at the bottom, is just literally textbook. Like, it's the bearish price action that you need. And this is why your stops are supposed to make sense. Because if, like, I could have my stops all the way up here, but once I get traded in higher, I feel like there's really no reason for me to still be in a trade if I've traded higher, probably inverse this fair value gap, that, and then yeah, like, no reason for me to be in a trade all the way up there. That's why stops are important. So I just had this at above here. Kind of, I didn't want to see a change in state of delivery after this 1 minute order block. That was bullish. Price did exactly what I wanted and retraced out of that inverse fair value gap area, and it was absolutely smacked. And this is just 1-1. Honestly, I need to experiment more with, making my take profit maybe 1 to 3 or 1.5, but it looks like it would have smacked here. I had some pretty good confidence with this trade too, so I feel like I could have held it all the way down to these lows. Like, all these, like, this strong liquidity got taken, this one and this one, which could have been beautiful. But you know what? Never gonna be upset about taking my piece of the pie, because that's what it's all about, just getting those wins, stacking it up, protecting the capital. And yeah, I feel like that price action was super textbook, super textbook, and I freaking love that. But yeah, that is July 15th, and yeah, the P&L ski is freaking beautiful, up like 2200. So yeah, you guys go ahead and have yourself a great rest of the day, and bye bye.